Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and we're getting an update today from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the hedgelesshorseman.com down below this interview so you can follow along with Erik's work. And Erik, always great having you on the show just to talk about what news flow in the junior mining sector has your attention. And we were talking off mic for a while here just about some of the different deals and different transactions we've seen in the space. One that jumps out to us just as we kick off this week is that Newmont Mining, the biggest gold mining company on the planet, has announced agreement for a sale of its Éléonore mine for $795 million cash. So basically $800 million for an advanced asset, a mature mine, but it's a mine that has a lot of potential to keep growing. So if somebody was willing to pay $800 million for it, this is part of Newmont's divestment program where they're divesting some of their non-core assets. But we were thinking about, well, then what are some of these mines that are waiting in the wings going to be worth compared to where their value is today? Now, granted, they're not in production like this one, but we were talking about the disparity between a lot of the development projects and where you see a mine sale go from a major to another big player. So I guess let's maybe kick it off there with, when you're looking at the field of development projects, look at the value arbitrage here for people that are patient and can ride some of these advanced development projects into mines in the future.
Yeah, well, I would like to start off with just say that, I mean, this gives us a really good insight what some people think a mine is actually worth when it's operating, because obviously we know the sentiment is shit in the junior sector, but I mean, the gold price doesn't care about the junior sector sentiment. The margins are what the margins are, the production profile is what the production profile are. So it's like, okay, we can tell that somebody thought that 800 million was okay to pay for a 200,000 per year mine that has, last I checked, all-in sustaining cost of 1,914, so it's not a low-cost mine. It had proven and probable reserves of 1.57 million ounces and total resources of 0.7 million ounces. It's an old mine. Reserves are not huge. The resources are not huge. It's high-cost mine, but somebody paid $800 million for that. And of course, I mean, the gold price is where the gold price is, which is, I think, still about $2,600. So I think it kind of shows again, it's like, if you actually have a gold mine in this environment, not even a great mine, this is not a great mine, and you still get 800 million in value from someone to do that. So it's like, okay, when you think about it, I mean, there's obviously, again, huge arbitrage. Let's say you find some of these junior developers, let's say, that have a project as good as this or actually better, which I think there are probably some projects out there that are better, larger, probably lower cost, fresh, have more exploration potential, but they're selling for a fraction of this. And of course, then that leads us into, it's like, okay, how do you actually get a development project into production? Well, you need it to be permitted and you need to have the backing to eventually build it or be able to sell it, for example. But it's like, it just kind of goes to show, I think, that, how valuable a mine could be in, for example, Canada, once it is in operation. And there's obviously some, screaming, I would say, value arbitrage from that perspective when you, again, look at many of the developers that actually have a shot of building a mine, and you look what the actual mines, when they're up and running, how much they're selling for.
Yeah, I think it's a great point. And it's also a good point you threw in there that it's in Canada, just because I think that you get a premium in certain jurisdictions. If this mine was in West Africa and some of the conflict areas, maybe it wouldn't get as good of a premium. But in general, the point being that if you look at a lot of the development properties on paper, there are a lot. There's probably a dozen or 2 dozen companies that have 1 to 6 million ounces of gold in the ground, even more than that in a couple cases, and they're trading at a fraction of this. So are there any out of that group, the development stage companies that maybe have an economic study out that you think look compelling when you look at the value arbitrage between where they're trading and where a producing mine like this is trading?
Yeah, I think Amex Exploration is a quite interesting case. It's not as big as this, but it's like, if you look at the PEA, it's like 1 million ounces of gold. All-in sustaining costs are expected to be much lower than the Éléonore mine. And sure, might surprise to the upside because, many PEAs are, a bit over optimistic perhaps. But still, I mean, it's selling for, or Éléonore was sold for 5.5 times what Amex Exploration has in market cap. So it's like, if I had 900 or 800 million dollars, would I rather buy 5.5 Perron deposits belonging to Amex Exploration, which is still, very much wide open. I mean, they've hit stuff all over the place, which is expected to be much higher margin than Éléonore, and just one Perron deposit is not, too far off from the P&P reserves of one Éléonore mine, and the capex is not that big either. And I think Amex could, I mean, they're in an area where I think they could get a mine permitted, and it's in Canada and all of that. So it's like, and the capex isn't huge either. So I think the threshold from that, I don't think financing will be that much of a hindrance, let's say. And they have Eldorado Gold as a shareholder who recently put in money. So it's like, especially, I guess, the de-risked assets again, because let's face it, if you have a good deposit, that's much better than Éléonore, and this is not going to get permitted, then it doesn't matter if it looks better than the Éléonore operating mine on paper, because you're never going to reach that stage where it's actually operating, so you can take advantage of the, let's say, value arbitrage.
Well, and in addition to the value arbitrage between what it's worth on paper and what a producing mine is worth, we were also talking, you were calling it a patience arbitrage. There's a lot of companies that if you told people, hey, look, this project is going to get built, it's going to be worth, $500 million to $1.5 billion in a couple of years, but it's trading at 100 million or 200 million market cap now. If you're willing to wait 3 to 4 years for the patience, to let it play out, and like hopefully some of those risk factors come off the table, like permitting and the capital stack, is it a good investment? So let's maybe just talk about that. Is it the patience arbitrage could reward people, but some people, Erik, are so impatient, as Rick Rule says, they have a hard time holding over a long weekend. So are we setting our sights too high with trying to get a 10-bagger this quarter versus just being in some of these companies and letting them play out over a couple of years and giving them the time to prove their thesis?
Absolutely. I mean, it's crazy. I was going to say, you can tell that just looking in the forums. So, I mean, if somebody's talking about a catalyst that might be more, 3 months out or plus, nobody's interested. Absolutely nobody. And it's like, in some cases, you kind of have an idea that's like, oh, over the next 6 to 24 months, I think this, and this will happen. That would be good. Let's say, de-risking events, for example, for a company. And it's like, nobody's really interested, because it's like, wait 6 months, wait up to 24 months, like, forget about it. It's like why am I not in crypto? Because that can double in a day, stuff like that. So I really do think, and it makes sense, because it is bloody boring to wait for stuff. But I would say it's like, at least today is probably the biggest edge you can possibly have, I think. Just being able to be bored and just look, because obviously a catalyst that is 6 months out from now, in 5.5 months, that's just going to be a half a month away then. And by that time, people are going to be talking about this imminent catalyst. And okay, if it's imminent and it's expected to be positive, yes, you can see a share price bump. And if you have a bunch, let's say, of news releases like that you think could happen over, let's say, 6 to 24 months, and nobody's really caring about it, so nobody's pricing that in now, I mean, that's how you kind of stack that patience edge. Because, okay, get a bump from the first one in 6 months, maybe, then like 12 months, you get another bump, and then, keeps going like that. But obviously, yes, I know, if you actually put out a case like that to anybody in these sectors, like, I mean, the amount of people that would care about a case like that is like 0.1%.
Yeah, it's just interesting, because I've been at 3 conferences in the last 3 months. Like in September, I was at Beaver Creek. In October, I was in Fort Lauderdale. And in November, I was in the New Orleans Investment Conference. And I sat down with companies that said, hey, pathway to permitting, we get this done by 2027. We do a construction in 2028. And hey, we're producing in 2029. I can think of like a handful of companies that told me that. And even my reaction, even trying to consider the patience arbitrage, was like, wow, that just seems like a really long way away. But the idea is it worth it to put some money away for 4 years if you could double or triple your money with a safer bet, because this project is already valuable on paper, and it's really just letting that orphan phase play out. So if we just circle back to Amex for another second, I just talked to the CEO, Victor Cantori, and he was pointing out that, their base case assumption was $2,000 gold. But if you look at spot prices at $2,600 gold, that project's IRR is actually 85% instead of just 60%. And its NPV at a 5% discount is 1.6 billion. So think about it. That's a 1.6 billion at today's gold price, but it's trading right now at a market cap of 139 million. So think about the delta between 139 million market cap and a project that at today's gold price really on paper is worth about 1.6 billion. You know, there's a huge spread there, a 10x spread, or really more than that, just on where it is today, where it could be worth. I'm not saying it should be worth that yet because they still have a lot of work to do, but they're also not done drilling it yet. They don't even have drill results from the last 26,000 meters, even including in the resource, and they're going to be drilling 24/7 for the next year or two. So as they continue to expand this, the project in theory should become more valuable, not less valuable. So what do you think about the delta sometimes between where an NPV is on an economic study and at least where would you think it should be valued based on it being not in production yet, but should be worth more than where it's at?
Yeah, I mean, so obviously on paper, it's like almost every PEA looks good and all of that. I mean, that's what I think is maybe the hardest part about this sector. I mean, I'm not a mining engineer or a geologist, but so you have to make some assumptions. And it's like, people that's like, oh, this deposit has 3 million ounces. It's selling for, I don't know, $50 million or something. And it's like, oh, I mean, I see another 3 million ounce deposit that's selling for 400 million. So obviously this is a good buy because it's, price so much lower. It's like, no, that's obviously not the case, because again, going back to the Éléonore situation, it's like on paper, I mean, if somebody came out with a PA, let's say, with that mine, given how it has looked recently, at least, like, oh, our all-in sustaining is going to be 1,900. We only have 1.5 million ounces in reserves. I mean, who's going to pay 800 million for that? It's like, it wouldn't be an impressive PA, I don't think. Of course, that's already built. But it's like, if you get a sense, it's like, hey, I think this project can be permitted. It makes sense. And then in this case, for Amex, for example, you already have a producer that's validating the case. And they validated it more with the recent participation in the placement. So it's like, I don't know more about mining than Eldorado Gold. So if they're putting in money and I look on the, as you said, like the economics look great, then we can see that the grades are really good. And there's obvious upside that you just described. And then, of course, at the end of the day, the most important thing is price. Because, okay, if Amex was priced at 500 million, it's like, yeah, it might still be cheap, at least at these gold prices. But it's like, compared to everything else, let's say. But in this case, I do think that, hey, I mean, it looks like a high quality project and it's a low capex project. So it's like, it's not that somebody, let's say a mid-tier, has to bet their entire company on this mine turning out, as well as it looks on paper. So I think that has it going for them. There's like relatively low risk, good area, good jurisdiction, all of that. So I simply think one has to focus on, like, okay, on paper, almost every project works, but will it work in reality? And can it get to the point where it will be tested in reality? And you get that, oh, now we have a mine even better than Éléonore. So if they got 800 million for it, when this is in production, it should be at, I don't know, 1.5 billion or something like that. So I think that's important. And that's the tricky thing about this sector. It's like, okay, figuring out what value is real and what is not, because most companies or most projects are crap. And even if they're down 80% the stock price, they're still overvalued in a sense, because like this is never going to translate to a monetization event.
Well, and you talked a little bit about being in a good jurisdiction, but also being in an area that's, working. I think that's why Éléonore got a better price tag being in Canada and being a known entity. We were talking about another company off mic that's maybe not well known to people listening, Mogotes Metals, MOG, but it's next to something that they probably will recognize, and that's Filo Mining, recently bought out by both BHP and Lundin Mining. So Mogotes is on the exact same mineralized trend, but we know that Filo Mining was just taken out for 4.5 billion Canadian. And so when you look at that and you look right next door and say, hey, this company's got land that's on the exact same mineralized trend, it's possible and it's probable that the mineralization extends onto its land. Is that why you're looking at Mogotes?
Yeah, I mean, there's closeology plays and closeology plays, or neurology, or whatever you want to say. I mean, their land package is literally continuous with Filo Mining. And what is, I think, is very interesting that just happened is that Philo Mining put out a news release about their drilling November 21st, and they had a hole 116, and they described it like this: 3 kilometers to the south of hole 107, we have confirmed a gold-rich porphyry in hole 116 in the Tamberias area, further expanding the footprint of the overall deposit. And then we can look at the hole 116, the broadest interval was 610 meters of 0.15% copper, 0.39% gold, and then some silver, for a CU equivalent of 0.46%. And the thing with that drill hole is like it's right up to the border, as far as I understand it, to Mogotes property. So the question is, will the mineralization just stop there, or will it continue there? And obviously what I think is interesting with Mogotes is the fact that the sunk cost will be so huge for Philo and BHP to build that one. It's like once that is in operation, which, I mean, I'm not going to say when it could be in operation, it's like you're probably going to mine everything in the area. I mean, let's say, I don't think maybe that Mogotes needs to find, a standalone new Philo mining type deposit, like a $4.5 billion deposit. But as long as they find something worth mining when all the infrastructure and everything is there, it's going to be of some value at least. So I think the threshold is relatively low, actually, theoretically at least. But of course, the thing is that, okay, who's going to buy that? I mean, there might be just one natural buyer, and who knows that, okay, let's say they prove up something and it might be not, super exciting, and, well, that's not going to be mined for another 30, 40 years. So it's like, yes, there are obviously considerations like that, but they have a lot of targets. And again, who knows what happens, because I have a hard time to see that the geology cares about some arbitrary put land borders, let's say, between two companies. So who knows? Maybe it simply just continues onto Mogotes ground. So I mean, just have a deep drill hole that kind of confirms there's like, well, right next to your project border, there's a gold-rich porphyry. I mean, might be the best news yet, actually, for Mogotes, even if it wasn't Mogotes that put out the news.
Yeah, it is interesting, and we should also point out that on the other side of Philo mining is NGX mining, which also is Lundin Mining, and it's got a big system. So you've got a $1.8 billion system next door at NGX. Then you got Philo mining selling for $4.5 billion. If Mogotes is on the very other side of this, the odds that they have nothing is probably smaller than that they have something. I don't know what it's worth, but it's probably worth more than the 24 million market cap that they're getting today. So it is interesting, and thanks for putting it on our radar for listeners here at the KE Report. And then one more that we have talked about on the show before with other guests, and I think you and I have talked about it before, Erik, is Hannan Metals. Hannan Metals traded on the TSXV under the ticker HAN. They put out this morning that they received their DIA approval for their maiden drill program at the Valiente project in Peru. So they basically got the green light to go ahead. That's their environmental impact statement, basically, in Peru. So that they got the go-ahead to start their maiden drill program here at Valiente. What do you make of this news for Hannan Metals?
Yeah, I mean, I like Hannan Metals. This is like pure high risk, high exploration. The thing is that they have such a large land package. Well, they have several land packages, many projects, kind of insane blue sky. I mean, they believe that they might have found a new porphyry district, basically, an undiscovered porphyry district. And every news release has come up with like, oh, we extended this anomaly, or we found gold here, we found copper there. And it's like, we've done trenching. I think they did like a 136 meter trench, which had pretty good grades, especially if you consider it being probably, leached sits at surface. So it's like way back in time when that was fresh, it was even higher grade. And then one could think, okay, what's going to be below that? And the thing is that it's like their Provisto project. This DIA approval is for the Valiente project, but they also have the Provisto project, which might be the most impressive one, actually. I recently talked to the company, actually. I talked to Lars, the Swede, and apparently they have a huge soil anomaly, 5 times 5 kilometers squared, which with very high grade numbers. You should look it up in the latest presentation. They believe that's an alkalic gold system. And as we know, I mean, they can be absolutely enormous, like Lihir and Porgera, which are tier 1 mines. And if you have you don't know what's there, but it's like if you have a 5 times 5 square kilometer gold anomaly with very high numbers, it's like there might be something there and it might be very big. If it's let's say, how the mineralization looks, I have no idea. They don't know if it's going to be, I don't know, narrow high grade or is it disseminated, yada, yada. Anyway, that's not going to be drilled yet, but Valiente now with this news release, they have the okay to drill from 40 platforms. The Ricardo Herrera, a porphyry copper gold target, Vista Alegre, epithermal gold target, Sortilegio, porphyry copper gold target. So it's like what I like about Hannan, not only is the blue sky exploration potential enormous, they have also like layers, let's say, of potential catalysts, where it's like they have a bunch of different projects at different stages. So it's like it's not going to be boring until they, let's say, drill the 5.5 square kilometer gold anomaly, but they will have a bunch. So it's like this is, for example, in my family's hodl portfolios for the simple reason it's like I don't know if they're going to make a significant discovery, but it's like they could, and it could be absolutely huge if they prove up another district. They have more targets than I can even remember, and it's good people behind it. But it's high risk, yes. But in a sense, again, it's like there's so many targets. But it's going to take some time, obviously, because even if there's something there at any of these targets, it's not necessarily that you're going to hit them on the first 3 drill holes. But my case is simply come back in a few years and see what has happened. If there's big success, it's going to be up a lot. And if they find no success, max downside is 100%.
Well, and like you said, Hannan has other projects besides just the Valiente project, but it is going to be exciting to see the maiden drill program. We'll keep following along with that program, and we'll reach out to the company and try to get them on for an update as they start drilling, but lots to follow along with. And they've got a couple of different, like you say, 3 different key prospects to work on that have different makeups of mineralization. So they got a couple different swings there for both gold and copper in Peru. But thanks for bringing up, all the different topics here today, Erik. Everything from the value arbitrage and the patience arbitrage between how a development project and how a producing mine, the spread there that investors can capitalize on if they have some patience and if they can see where the trend is going and connect the dots. With Amex there as the example, it was fun to talk about Mogotes, on the same trend with Philo and NGX. And then it's fun following along with Hannan Metals. So we'll keep following along with all these different news flows to see how things go with all 3 companies. And if people want to follow along with Erik's work over at the Hedgeless Horseman, definitely click on the link below this interview. You can follow along with the different articles he writes up, the videos he produces on the sector, and some of his rants, which are also legendary as far as the way he digs into analysis for value investing. Erik, always great having you on the show, and looking forward to our next conversation.
The same, Shad. Thanks. And like always, consider me biased. I own shares of all companies I mentioned, and Amex and Hannan Metals are banner sponsors, so twice biased.